Portfolio Management Services, Chapter 12, Regulatory Governance and Ethical Aspects of Portfolio Managers. The Prevention of Money Laundering Act 2002 forms the core of the legal framework put in place in India to combat money laundering. The provisions of PMLA came into force on July 1st, 2005. The objective of PMLA is to prevent money laundering and to provide for confiscation of property derived from or involved in money laundering and for matters connected therewith or incidental thereto. Provision of PMLA stipulate that every banking company, financial institution, and intermediary shall maintain a record of all transactions that the nature and value of which may be prescribed, whether such transaction comprises a single transaction or a series of transactions integrally connected to each other, and where such series of transactions take place within a month, and furnish information of transaction and verify and maintain the records of the identity of all its clients. Such transactions include all cash transactions of value of more than 10 lakhs or equivalent in foreign currency, all series of cash transactions integrally connected to each other which have been valued below 10 lakh or its equivalent in foreign currency, where such series of transactions take place within one calendar month and aggregate value of such transaction exceeds 10 lakhs. All suspicious transactions, whether or not made in cash for the purpose of suspicious transaction, apart from transaction integrally connected, transaction remotely connected or related, shall also be considered. The records which have been referred to in the above paragraph have to be maintained for a period of 10 years from the date of cessation of the transaction between the clients and the banking company or financial institution or intermediary, as the case may be. Section 3 of the PMLA 2000 define offense of money laundering as whosoever directly or indirectly attempt to indulge or knowingly assist or knowingly is a party or is actually involved in any process or activity connected with the proceed of crime, including its concealment, possession, acquisition, or use of projecting and claiming it as untainted property, shall be guilty of offense of money laundering. Any person found indulging in any offense of money laundering as defined in Section 3 of the PMLA shall be punished as per provision mentioned in Section 4 of the Act. The obligation of banking companies, financial institution, and intermediary has been specified in Section 12 of the PMLA 2002. Every reporting entry shall maintain record of all transactions, including information relating to transaction covered under clause in such manner as to be enable it to reconstruct individual transaction. This record shall be maintained for a period of 5 years from the date of transaction between a client and the reporting entity, furnished to the director within such times as may be prescribed. Information relating to such transaction, whether attempted or executed, the nature and value of which may be prescribed. Maintain record of documents evidencing identity of its clients and beneficial owners, as well as account files and business correspondence relating to its clients. This record shall be maintained for a period of 5 years after the business relationship between a client and the reporting entity has ended or the account has been closed, whichever is later. Every information maintained, furnished, verified, saved, or as otherwise provided under any law for the time being in force shall be kept confidential. Section 12 AA of PMLA stipulates enhanced due diligence by reporting entities the details. Every reporting entity shall, prior to the commencement of each specified transaction, verify the identity of the client undertaking such a specified transaction by authentication under the Aadhaar in such manner and subject to such condition as may be prescribed, provided that where verification requires authentication of a person who is not entitled to obtain an Aadhaar number under the provision of the said act. Verification to authenticate the identity of the client undertaking such a specified transaction shall be carried out by such other process or mode as may be prescribed. Take additional steps in examine the ownership and financial position including source of funds of the client in such manner as may be prescribed. Take additional steps as may be prescribed to record the purpose behind conducting the specified transaction and the intent nature of the relationship between the transaction parties. The information obtained while applying the enhanced due diligence measures shall be maintained for a period of 5 years from the date of transaction between a client and the reporting entity. Where the clients fail to fulfill the above condition, the reporting entity shall not allow the specified transaction to be carried out. Specified transactions mean any withdrawal or deposit in cash exceeding such amount, any transaction in foreign exchange exceeding such amount, any transaction in any high value imports or remittance, such other transaction or class of transactions in the interest of revenue or where there is a high risk of money laundering or terrorist financing as may be prescribed. Where any specified transaction or series of a specified transaction undertaken by the client considered suspicious or likely to involve proceed of crime, the reporting entity shall increase the future monitoring of business relationship with the client, including greater secured scrutiny or transaction in such manner as may be prescribed. As per provision, PMLA intermediaries registered under SEBI Act shall have to adhere the provision as given to PMLA. Principal officer needs to be designated who shall be responsible for ensuring compliance of provision of the PMLA. SEBI has issued necessary and directives, wide circulars from time to time covering issues relating to know your clients, KYC norms, anti-money laundering, client due diligence. These directives lay down minimum requirements and it emphasized that the intermediary may, according to their requirements, specify additional disclosure to be made by the clients to address the concern of money laundering and suspicious transaction undertaken by the client. Provision of insider trading regulation 2015. Any dealing trading done by an insider based on information which is not available in public domain gives an undue advantage to insider and affect market integrity. This is not in line with the principle of fair and equitable markets. In order to protect the integrity of the market, the SEBI regulation have been put in place. Schedule C of the regulation specifies the minimum standards of code of conduct for intermediaries and fiduciaries or to regulate, monitor and report trading by designated person. The details are given below. The compliance officer shall report to the board of directors or heads of the organization and in particular shall provide reports to the chairman of the audit committee or another analog body, if any, or to the chairman of the board of directors or head of the organization at such frequency as may be stipulated by the board of directors head of the organization but not less than once in a year. All information shall be handled within the organization on a need to know basis and no unpublished price sensitive information shall be communicated to any person except in furtherance of legitimate purpose, performance of duties or discharge of legal obligation. The code of conduct shall contain norms for appropriate Chinese wall producers and process for permitting any designated person to cross the wall. Designated person and immediate relatives of designated person in the organization shall be governed by an internal code of conduct governing dealing in securities. Designated person may execute trades subject to compliance with these regulations. Trading by designated person shall be subject to pre-clearance by the compliance officer if the value of the proposed trades in above such threshold as a board of directors. The compliance officer shall confidently maintain a list of such securities as restricted list. Such shall be used as the basis for approving or rejecting application for pre-clearance of trades. Prior to approving any trades, the compliance officer shall seek declaration to the effect that the applicant for pre-clearance is not in possession of any unpublished price-sensitive information. He shall also have regard to whether any such declaration is reasonable capable of being rendered inaccurate. The code of conduct shall specify any reasonable time frame which in any event shall not be more than 7 trading days, within which trade that have been pre-cleared have to be executed by the designated person following which fresh pre-clearance would be needed to be the trades to be executed. All designated persons shall be required to disclose name and permanent account number or any other identifier authorized by law of the following to the intermediary or fiduciary or in annual basis and as and when the information changes. Immediate relatives, person with whom such designated person shares a material financial relationship, phone, mobile and cell number which are used by them. In addition, name of educational institution from which designated person have graduated and name of their past employees shall also be disclosed on one time basis. The term material financial relationship shall mean a relationship in which one person is a recipient of any kind of payment, such as by way of loan or gift from a designated person during the immediately preceding 12 months, equivalent to at least 25% of the annual income of such designated person, but such exclude relationship. SEBI provision of fraudulent and unfair trade practices relating to securities market. SEBI defines fraud as inclusive on act, expression, omission, or concealment committed to induce another person or his agent to deal in securities. Chapter 2 of the regulation provides certain dealing in securities covering buying, selling, or issuing of securities. The regulation provides buy, sell, or deal in securities in a fraudulent manner, use or employ in connection with issue, purchase, or sale of any securities listed or proposed to be listed, any manipulative or deceptive device or contrivance in contravention of the provision of SEBI Act और क्या बकवास दे रखा है यार SEBI Portfolio Management Regulation 2020. Summary of SEBI regulation have been covered in the previous chapter, and where portfolio means the total holding of securities and goods belonging to any person. Principal officer means an employee of the portfolio manager who has been designated as such by the portfolio manager and is responsible for the decision made by the portfolio manager for the management or administration of portfolios of securities or the fund of the clients, as the case may be, all other operation of the portfolio manager. No person shall act as a portfolio manager unless he holds a certificate granted by SEBI under SEBI PMS regulation. Condition of registration. The registration granted under PMS regulation is subject to the following. The portfolio manager shall abide by the provision of SEBI Act and SEBI Portfolio Manager Regulation. The portfolio manager shall obtain prior approval SEBI in case of change in control in such manner as may be specified by the SEBI. The portfolio manager shall forthwith inform SEBI in writing if any information or particular previously submitted to SEBI are found to be false or misleading in any material particular, or if there is any material change in the information already submitted. The portfolio manager shall pay the fees for registration in the manner of provides in SEBI PMS regulation. The portfolio manager shall take adequate step for the
redressal of grievance of the investor within the time stipulated by SEBI, and keep SEBI informed about the number, nature, and other particular of the complaint received. The portfolio manager shall maintain the net worth as specified in PMS regulation at all times during the period of the certificate. This is not applicable in the case of co-investment portfolio manager. Management and administration of client's portfolio. The money or securities accepted by the portfolio management manager shall not be invested or managed by the portfolio manager except in terms of the agreement between the portfolio manager and the client. Any renewal of portfolio or maturity of the initial period shall be deemed as fresh placement, notwithstanding anything contained in the agreement as referred in the PMS regulation. The fund securities can be withdrawn by the client before the maturity of the contract. Voluntary or compulsory termination of portfolio